Hello and welcome. Today, we embark on a comprehensive journey into the world of one of the most consistent, disciplined, and perhaps most mysterious geniuses in the history of the financial markets, Stanley Druckenmiller. We are diving deep into his mind and the unshakable strategic fortress that has allowed him to manage billions of dollars for over 30 years without ever recording a single losing year. Today, you aren't just listening to a success story. You are about to learn, in the finest detail, how one of the greatest traders of all time synthesized price action, liquidity, and human psychology into a flawless, legendary game plan. What truly places Stanley Druckenmiller in a league of his own in the modern financial world is his unwavering yet deeply rational approach to technical analysis. For many retail investors, technical analysis is often misunderstood. It is viewed either as a desperate lifeline, a form of crystal ball fortune-telling, or merely a collection of colorful indicators on a screen. But for Druckenmiller, technical analysis is not a belief system or a mystical power. It is strictly a tool for validation and timing. He never views technical analysis as a magic box that operates in isolation or answers every question. Instead, he lives by a principle that has now become legendary in the trading community. I never use valuations to time the market. I use liquidity and technical analysis for timing. This single sentence effectively eliminates the most common and devastating mistake in the trading world, the error of losing money while trying to prove that you are right. While macroeconomic data and fundamental analysis tell him what to buy, the charts and price movements tell him exactly when to pull the trigger. In Druckenmiller's universe, technical analysis functions as a massive mental filter rather than a simple signal generator. To truly understand how this filter works, we must look closer at his concept of tape reading. In modern times, we often call this price action. But for Druckenmiller, the concept goes much deeper. In his analysis room, there is no place for a cluttered mess of complex indicators or oscillators that obscure the reality of the screen. To him, price is the most honest, pure, and transparent source of data available. Price does not lie, and price does not make excuses. In the macro world, everyone essentially has access to the same data. Inflation figures, Fed interest rate decisions, and employment reports hit everyone's monitors at the exact same time. However, when everyone possesses the same information, the real edge is found in how the market reacts to that information. This is where Druckenmiller focuses his gaze. If the market struggles to rise despite a string of positive news, or if the price refuses to fall when the macro data looks apocalyptic, the ultimate truth for Druckenmiller is the price itself, not the headlines. He does not waste time chasing lagging indicators like RSI, MACD, or moving average crossovers. His focus remains fixed on the quality of the trend, the direction of momentum, and critical price breakouts. Specifically, the harmony between multiple timeframes, such as a primary trend on a weekly chart being supported by a momentum breakout on a daily chart, is his strongest confirmation mechanism. When he captures this alignment, he knows the mathematical probability of the trade's success has increased significantly. Perhaps the harshest and most difficult of Druckenmiller's principles to implement is the "don't argue with the tape" rule. This is a total ego control mechanism. An economist or a strategist can spend hours explaining that an asset's valuation is too expensive and that current prices are irrational. But for Druckenmiller, price is the final result of the market's collective intelligence. If a liquidity-backed trend is moving upward and the price is consistently making higher highs, standing against this flow is, in his view, nothing more than a sign of intellectual arrogance. The market does not reward those trying to be right. It rewards those who follow the flow of money. He looks at what the market is actually doing, not what it should be doing according to a textbook. This perspective is what kept him alive even during the 1987 crash. When the market began to collapse, he bowed to the price action and changed his direction in a matter of seconds, regardless of his original macro thesis. At this point, we must discuss another vital function of technical analysis: risk management and position sizing. For Druckenmiller, a technical level is not just an entry point. It is the level where he declares to the world that he is wrong. A stop-loss point is not just a random number. It is the specific point where the macro story behind the trade is technically invalidated. If the price turns against the established technical boundaries, no matter how logical the fundamental thesis seemed at the start, that idea is wrong for that moment, and the position is abandoned immediately. The technical level is where the ego dies. This discipline is the main reason he was able to manage massive amounts of capital for 3 decades without taking life-threatening wounds at the table. To him, trading is not a war of being right. It is the art of survival and capital growth. The real difference that makes Druckenmiller truly legendary lies in his ability for asymmetric thinking, which he builds upon technical analysis as a foundation. He doesn't look at trades as just lines on a chart. He approaches every trade as a balance of probability and risk versus reward. Before entering any position, he asks, how much do I lose if I'm wrong, and how much can I gain if I'm right? If the probability of loss is 1 unit, but the potential gain is 5 or 10 units, that is when Druckenmiller makes his famous big bets. This is the most critical lesson he learned during his years at the Quantum Fund working with George Soros. When you find a truly rare opportunity where the risk-reward balance is overwhelmingly in your favor, playing small is not just a mistake, it is a financial sin. Think back to the legendary British pound trade in 1992. He saw a structural contradiction, and the macro and technical data confirmed each other. When Soros asked him how big his position was, and Druckenmiller replied that he had invested his capital, Soros responded with the famous insight, "If we are this certain, why aren't we using leverage to do even more?" This represents the pinnacle of asymmetric risk management. However, behind these massive bets lies a level of patience and liquidity reading skill that most traders simply do not possess. Druckenmiller is not someone who trades every day or seeks excitement from every market tick. He waits for the right moment like a patient hunter. As Jesse Livermore famously said, the big money is not made by constant movement, but by knowing how to sit tight in the right position. Druckenmiller understands that the primary fuel for markets is not corporate earnings, but liquidity. Money supply, credit expansion, and the actions of central banks are the true architects of bull and bear markets. Technical analysis is simply the most honest mirror reflecting how this liquidity flow manifests on the charts. If liquidity is present but the price is not rising, it is a sign of a major trend reversal. If liquidity is tightening but the price is still moving up artificially, it is the silence before the storm. One of the most striking lessons in Druckenmiller's career occurred during the tech bubble of 1999 and 2000. After years of immense success, when he realized the market structure had changed and moved outside his area of expertise, he showed the courage to stop while he was at the top. This is not just technical knowledge, it is entirely a matter of character, self-awareness, and discipline. Very few people in the financial world can stop and walk away when their advantage ends. He does not stick to a single style. He blends macro with technicals and liquidity with trends as the situation demands. His success is based on a dynamic mindset, not a static model. When the market changes. He never falls in love with an idea. The period of forced maturation at the beginning of his career taught him to trust his intuitions and price movements. Taking on great responsibilities before his analytical muscles were fully developed forced him to learn the language of price just to survive. This forced education developed his greatest future weapon, mental flexibility. Druckenmiller shows us that a trader's greatest enemy is not the market, but their own fixed ideas. He sees technical levels not as dogmas, but as breaking points of market psychology. When a support level breaks, he reads it not just as a line being crossed, but as the end of the hopes and stories of thousands of investors. As we bring this journey to a close, let us remember the greatest legacy Stanley Druckenmiller has left for us. Technical analysis is not a fortune-telling tool. It is a professional compass used to ride the trend, adjust timing, and, most importantly, control risk. Success comes not just from memorizing indicators, but from reading the market as a whole, alongside liquidity, macroeconomic realities, and the raw, unadulterated movement of price. It's about knowing when to play big with courage when you have the advantage, and knowing how to set aside the ego and exit with small losses when you realize you are wrong. This is the most valuable lesson from the most disciplined player of the modern era. He is more than just a fund manager. He is a system of thought. When you integrate this discipline into your own trading plan, the markets will no longer appear as chaos, but as a meaningful narrative. Remember, being right doesn't win medals in this game. Only being in the right direction at the right time makes you money. Druckenmiller's 30-year odyssey is the most brilliant proof of this truth in financial history. Thank you for listening, and until next time, keep your eyes on the tape.